Michael Jordan said it best. Fuck them kids. You know, I don't know if he actually said that. That was like a meme going around for a long time, but the point still remains. Savings is boring, let's face it. And if you try to save money for your kids, if you save $100,000 for them, for example, right now, they might be big ballers, but by the time they get their hands on it, it might be equivalent to a loaf of bread. And I'm not being dramatic. This has literally happened in multiple countries. The good news is that there's options that would allow you to just enjoy your money right now, carefree, live the life you want to live, and still leave your kids off really well financially. And even if you don't have kids, you can still take advantage of these life insurance policies. So let's get into it. There are two types of insurance. There's term and then there is permanent. Let's start with term. Term life insurance is basically like most of the insurance that you have right now. Medical insurance and your car insurance. You literally rarely ever use it. It just kind of seems like they're just kind of taking off with your money. But if you do need it, papa, you're going to be happy that you had it. Term gives you just a set period to die, okay? They like, listen, you got 20 years. So if you find yourself on your 19th year and you're still alive, you got a decision to make. This is kind of why it gets a bad rep, because people are like, oh, you're spending all that money and you know, it doesn't pay out. You put all these thousands of dollars into the plan and it doesn't pay out. Okay. Same thing with car insurance, same thing with homeowners insurance. I mean, all of this is how insurance works, okay? How can you create a more viable option? If you can, then do it. And let me know so I can support. For the term, there are different intervals you can pick. People typically stay around 15 or 20 years, depending on kind of where you are in your life. It will be more expensive as you get older because obviously that increases the chance that they're gonna have to pay out. Right now, I am 30 years old, right? And I have life insurance through my job, but let's say I was just doing it separately, I would do 15 years right now, okay? That way, when I'm 45, then at 45, I might take out like a 30-year loan and that'll give me to 75. So, you know, while I'm 45, I'm gonna keep it nice and healthy. I'm still gonna be looking good, honey. I'm gonna have my health in check and I should still have a lower like, you know, premium, which is a monthly payment. I should have a lower premium, and then if I croak within that time, then I had a low premium. My kid gets a nice healthy payout because I would do maybe 5 times my annual salary, and that's it. The older you get, just like I said, the more chances you are to have a higher premium. And if you have pre-existing health conditions, they might just flat out be like, nah, we're not gonna help you. All right, so think about where you are in life, and if you are in good health, consider getting it now. It is very, very, very cheap. I mean, it's cheaper than your home insurance. It's going to be cheaper than your rent insurance. I think I pay like $7 or $8 a pay period. So I pay like $14 a month. That's it. Even if you're not older, it's a good idea to take it out, especially if you have kids, because something might happen to you unexpectedly, right? People be dying every day, B. So if you do it, you're paying maybe $7 a pay period, and you have that comfort and that kind of, what's the word I'm looking for? It's not comfort. Anyways, I can't remember the word, but you basically are securing your security. That wasn't the word either. Basically, you know that if something happens to you, your kids will be totally fine, okay? And you can list multiple beneficiaries on your policies as well. Now, permanent is nothing like term because you are guaranteed a payout, okay? You're putting a certain amount of money up, okay? So you're saying I'm putting out, I'll have a insurance policy for like $1 million. That's it. They're going to pay that out no matter what. It's for your whole life. That's why they call it whole life insurance. You'll hear that. Universal life insurance. It's permanent. Permanent life insurance is typically, people have like a love-hate relationship with them. On one end, it's nice because, like I said, it's a payout. You don't have to worry about renewing and being ineligible when you get older because you might have certain conditions, right? This is whole life. It covers your whole life no matter what's going on. But because of that, it's very expensive, okay? So like where you might pay $7 a month with your term, you would pay $100 a month, for example, with your whole life. This one might be better for people who don't have kids because, like I said, it's your whole life. And when you're making the payments, a part of the payment goes into your cash value and a part of it goes towards, you know, making investments, all the fees you got to pay because this comes with a lot of fees, okay? And things like that. But the cash piece, okay? Let's say for some reason you decide you don't want the policy anymore, right? With term, if your policy's up, it's up and it's stuck. You ain't getting no money, okay? That's it. But if you cancel your whole life, right, or your universal life, there's a cash value in there and you kind of get that cash back, right? So at least you're not like losing all your cash Whereas with term, you're definitely losing everything unless you die. And then you're losing everything then too. The reason why it would be a good tax strategy is because withdrawals out of your whole life policy are not taxable. The facts are, if you want to have insurance, you don't have to pick and choose. You can do both of them. Also, if you have a term policy and whole life is, sounding kind of good, you can convert your term into a whole life. So you have options. Some people say, what is the point of doing whole life? Because if you just do term, you still have that life insurance piece. And then you could just invest the difference, like I told you, $7 for term, let's say, and $100 for whole life. Invest that difference in the middle. Who needs a cash value, okay? I got the cash right here, and I actually have more control over that cash. So I tend to lean towards term. That's what I have right now. If you're somebody who's making a lot of money and you need to find ways to kind of tuck your money somewhere else, then maybe whole life would be more advantageous. But there's other things that you can do before you get to insurance and using insurance as an investment. I think that these things can be separated, right? And they probably should be separated. I've always, and actually I haven't said this in a while, there's a couple of different things you do with your money, right? You can save it, you can invest it, or you can have things that are wealth preservation. I think of gold and silver as wealth preservations. Life insurance is more of like an insurance, right? That's also a wealth preservation, because if something happens to you, then you're carrying that wealth over to the next generation. When you mix it and you're kind of having like an investment / insurance, nothing's really wrong with that, but it can get complicated. And there's things you can do, like I said before you get to this point, because you can use your IRA, you can use your real estate and put your money, kind of park it in real estate. That's a tax haven too, and other things like that. So there's different options. So you can save for your kids, but you're literally paying pennies on the dollar for insurance, okay? If you're paying $7 a month or so, that could be for like $100,000 policy. You're not gonna actually pay $100,000, but your kid's gonna definitely get that if something happens to you, okay? So that alone should encourage you to not just think about savings for your kid, okay? Or even for yourself. But if you still need some extra encouragement for why you shouldn't be just focused on savings and having a savings goal, check out this video right here and make sure you keep your money up.